Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. In this video, I want to talk about probabilities. I want to talk about the claims I make in my channel, the things that I say that I know. Do I actually know them or am I just guessing? Is it speculation, right? How do you go about justifying the claims that I've made, particularly when there's been some pushback, right? So, if you look at my channel, I've talked about GameStop trading below cash and Tony Dinero saying, well, you can't say that you know that the convertibles are going to convert, right? You can't say that you know that. That's been a claim that's been pushed back. I've said, hey, GameStop is going to do hundreds of millions of dollars in power pack sales. People say, you can't say that you know that. In a recent video, I talked about how GameStop was pumped and dumped back in 2007. And Battle Boy said, "Hey, this feels a little bit like speculation. You can't say that you know that." And so I want to talk about this because if you want to go on this video, the pump and dump video, and read kind of my back and forth with Battle Boy, I appreciate or Bateau Boy, I don't know. I appreciated this discourse a lot, but I wanted to give it some leg room to actually talk about it in a video because I think this is a commonly felt sentiment for different people about different topics. And I want to kind of explain myself and not just explain myself, but help you as an investor make your own decisions as it relates to your investments, your portfolio, and GameStop in particular. And, the gist of the conversation was, hey, I like a lot of your videos. A lot of it feels solid, but hey, this one feels a little bit like speculation to me as it relates to saying that GameStop was pumped and dumped by their original management. And I want to and anyways, where the conversation ended and where I'll start this conversation is when you say that, hey, you can't say that you know that, are you saying, and I'm not targeting you, Bad Boy, I'm just saying for anyone who has any type of pushback on anything, whether it's something I've said or someone else says, right? Like, are is your point that, well, you can't technically know that. Yeah, there's a 99% chance, but you can't say that you know that. If that is the point you're making, then I just want to clarify that from an investment perspective, financially, that's a moot point. Like it doesn't matter. So let's take like Bitcoin, for example. Some people have said when you're thinking about what is GameStop's cash floor, what's their real cash floor? Some people say, well, how do you know that GameStop's Bitcoin is even going to be worth anything, right? How do we really value that? What if Bitcoin goes to zero, right? The classic what if arguments. Most it's a key tell for, oh, are you talking about a 1% chance situation? Because you could say, well, what if Bitcoin goes to zero? Are you saying that your valuation for GameStop's Bitcoin position right now is zero? Is that what you say that you value Bitcoin as, that you think it's worth nothing right now? Or are you saying, well, it could be worth nothing one day, right? What is the difference? And if you're saying it could be worth nothing one day, the question is then, what are the odds that you think that would happen, right? And why would that happen, right? Make the case. Don't just throw out a, well, what if? Like, are we in a college psychology class? It's like, well, we can't actually know that we're really humans. It's like, okay, well, for now, we're going to go with we probably are humans. Like this guy probably is blue, although technically that's not really the best example because light refraction, whatever. But right, there's all these technicalities, right? I could tell you, hey, I don't like fruit, which is true. I don't. I would make that claim about myself. I don't like eating fruit. And you could say, but you like pizza, and pizza has marinara sauce, and tomato is a fruit, and so you do like fruit. I'd say, okay, that was cool and funny. Thank you for that point. How about this? I don't like culinary fruits. Are you happy now? Also, I don't like raw tomatoes either if you really want to get there. But like, do you understand uh like that argument is not worth having? And the fact that I like marinara sauce on my pizza does not somehow like discredit the reality of the statement of like I don't like fruit. So Bitcoin, for example, like the fundamental support for Bitcoin is inflation. It is inflation. There is demand for stores of value, right? It's currency, period. But why would crypto exist as a portion of the currency pie? Basically, trust in governments declining. And so like fundamentally there's like a demand for alternative stores of value, right? So what would be the catalyst for Bitcoin's valuation to be lower? You also have historically, you can track the compounded annual growth rate of Bitcoin over its 15-year history or however long it's existed. And it's like, okay, it's going up at this growth curve. It went up like this, boom, at the beginning, and now it's going up like this, boom, still pretty solid, right? But technically speaking, right, from a financial perspective, there's no reason to think it would become worthless. And fundamentally, there's no reason to think it would become worthless, right? So are you saying that it's worthless just because what if it was, right? Well, like what if your hair turned into a volcano right now? Like what are we even talking about? If you're saying, well, no, here's the reasons why, like here's legitimate concern about the long-term valuation of Bitcoin. I'm like, okay, let's start going there, right? So we know that there are many companies now worth over $100 billion that store a portion of their value in Bitcoin, right? So is Bitcoin going to go back to levels before anyone other than drug dealers were using it? Like, there's no reason why it would go down to those types of levels, right? There's so much more support in the system for Bitcoin now than back then, right? But are you saying it could crash to 2016 levels? Okay, it could in the short term, right? Are you saying long term it's going to stay there forever? Then, okay, again, what is the fundamental case, right, for other stores of value becoming superior to Bitcoin and or fiat currency actually changing the tide of inflation, changing the tide of government trust? And here's actually why people will value fiat currency more as a portion of their net worth, why that will be a like wind in the sails, right? That's a bullish trajectory. What's the inversion, right? That would cause that 10 years from now to be a bigger slice of the pie than it is today. And and then how do you weigh that? Right? So if you think there is a 1% chance that Bitcoin 10 years from now is worth nothing, right? You think there's a 5% chance it's worth half as much as it is, then again, why? These aren't like arbitrary, right? What are the actual odds? And then you can value the odds, right? Like so that's what I do with my GameStop valuation model, right? There's this floor case, fair case, fly case scenario. There is a really solid chance that software declines, right? If you want to come in my video and be like, look, this bull case for software, there's no way. I would say, yeah, actually, I agree with you. That's why I've got it at a 5% weight compared to the 50% weight that software actually keeps declining 25% year over year. But you could do this same thing with Bitcoin, right? You could say that there is some percent chance that it's worth blank, right? Let's just type over this. If we made this Bitcoin, right now GameStop's Bitcoin is worth whatever, $450 million, right? You think that there's a what percent chance do you think that's worth meaningfully less 5 years from now than it is today, knowing what we know, and then why, right? Like what? is the catalyst. You can't just, if you're being honest about your investments, which you don't have to be, okay? If you're just arguing with me or you're just arguing with someone else, you're just being a troll on the internet, you can say whatever you want to say. That's fine. But if you're making decisions for your investments, then you want to think about, like, why does what you're saying make sense? Like, how is it rational? How is it plausible? And let's just say maybe the rational reason that Bitcoin's worth meaningfully less, let's say half as much, 5 years from now, is just that liquidity dries up all over the place, right? There's just a huge crash everywhere. And for that reason, Bitcoin is going to crash even more and whatever, right? Again, we're being kind of lazy about this because you really want to put some legs to it, right? But let's say that this Bitcoin is currently worth close to 500 million. 5 years from now, you think it's only going to be worth 100 million, right? And sorry, not 100,000. An 80% collapse, 80% crash. And you think that that is a what, a 5% chance, right? This is a huge, again, fundamentally, there's no reason to think this would happen as far as why would Bitcoin no longer have um, a demand, right? Why would alternative stores of value no longer have demand? And then, technically speaking, there's no reason to think it would go this low, right? We see years and years of compounded growth, but maybe you think there's a 5% chance it's 80% down, right? Okay, well, what are the odds that it keeps appreciating like modestly, right? That let's just say Bitcoin grows 5% year over year, which would be like, again, low odds. That would be a sharp, sharp decline in growth rate from what Bitcoin has been um, historically. But if you took that 450 and say it's going to grow at 5% year over year, then that means that in 5 years you think it would be worth 547 million, right? 547. And you think that is a 25% chance, like really meaningfully, the Bitcoin thing could slow down. Or another way you could say this is really meaningfully, there's a chance that Bitcoin goes down by a lot and then recovers, but it's choppy. And when it's all said and done, even though the S&P 500 will be almost double where it is, right? It averages a double every 7 years. You think Bitcoin's only going to be 20% higher, right? It's going to underperform the S&P by 80%, right? And you think that's a 25% weight. Well, then that means you think there's a 30% weight that what? It's going to keep doing what it's doing, right? And let's just say it's growing at 20% or let's say 18% year over year, even though it's really probably more than that, whatever. That means you think there's a sorry, not a 30, but a 70% chance that 5 years from now, that 450 million in Bitcoin is worth $1 billion and 30 million on top of it. So that means your weighted average valuation 5 years from now on the present GameStop Bitcoin position is $862,000, right? It's a 2x from current levels. If you want to talk about weighted average probabilities. So again, if you're saying, but what if it goes to zero? What if it goes to zero? Look, no one is in charge of you except you. If you think it's going to go to zero, I would encourage you to think about why. And if you think that somehow that is this linchpin that destabilizes GameStop's valuation, it's like, well, look, even if you put this 1% chance thing of happening on your valuation model, what happens to the big picture? Again, this then goes up to 29 to average it all out. Nothing. Even if you didn't up this odds, right? Nothing, right? A 1% chance of the Bitcoin, for example, becoming worthless does not meaningfully impact how you would value their Bitcoin position if you're modeling it based on probabilities. Now, if you're talking about, well, I don't want to talk about valuation. I just want to talk about what ifs of a worst case scenario, downside protection. That's a different conversation, and it's worth having that conversation if and to the extent that GameStop exists in your portfolio for its downside protection, right? If 80% of your GameStop shares are in your portfolio because you want to be able to outperform if the macro performs horribly, right? Or even if GameStop performs horribly, you want to know that it is very well supported and in terms of its valuation, then again, it would be worth looking into what's that worst case scenario. But then you stack that with another worst case scenario on hardware, another worst case on software, another worst case on collectibles, another worst case on their ability to raise new capital, another worst case on how they allocate their cash, right? And all of a sudden, the probabilities is 1% times 1% times 1% times. It's like, look, this would be a crazy way to base your investment decision making. In my channel, again, I'm a financial advisor. This is level-headed analysis, right? This is not like, let me try to back out everything that I just did to ruin my software evaluation. Okay, boom. This isn't financial advice. This isn't here to tell you what to do. But if you're thinking about what you want to do, you want to take weighted probabilities. So, as it relates to claims in my channel, right? What's the weighted probability, for example, that Power Packs is doing hundreds of millions of dollars in revenue? Well, we know that Ryan Cohen said collectibles is going to be just about a third of total sales in 2025. So, again, I could say, look, we know that Power Packs is doing hundreds of millions in sales. And you could say, well, you don't know that because they haven't reported it. Okay, you're right, technically, right? I like marinara sauce. Okay, thank you for that. But are you saying you think it's likely that Power Packs is doing less than hundreds of millions in revenue? And if you are saying it's likely or even plausible, what odds are you putting on that? Like Tony De Niro, right? He's like, you can't value this, right? Okay, so what odds does Tony put that either Ryan Cohen is lying or hardware and software revenue is plummeting such that a third of company sales is actually much lower than 1.5 billion in 2025? Right? Those are the only two options. The third option is actually digital power packs isn't doing anything, but actually grading and GameStop's plush animals and their digital card, their marketplace on their website, actually those are what's skyrocketing. But the reason why you wouldn't want to talk about that if you're being conservative is the margins on all of those are way higher than their power packs, right? So you don't want to go there. It's either Ryan Cohen's lying or was under the influence of artificial substances and accidentally spoke insane, right? Or switch to is plummeting and actually, full year software plus hardware is only going to be 2.5 billion in revenue instead of 3.4, and so actually Power Packs is only going to do 200 million instead of 500 million over Q3 and Q4, right? Like, what are the odds? Are you just having the conversation to be cute, or do you think it's really meaningfully plausible? It doesn't matter to me. I'm trying to talk to you as it matters to you, right? Um, because for me, what the clarity I'm wanting to offer in this video is that scenarios that are 1, 2, 3, 4, 5% chances that also lack reasonable support, right? They're very speculative in nature. Like, well, what if something that's not happening starts to happen? What if things that don't happen um, right now start happening? Like, and there's no reason why. We're just talking just to talk. What I'm trying to show you is that financially that doesn't matter. As far as making a calculated risk-adjusted investment decision, if you're talking about something that has real odds of happening, then it's certainly worth talking about, right? As it relates to GameStop's convertibles, for example, there is no there is no plausible reason why GameStop will not be able to dilute these if they want to dilute them. As it relates to GameStop's Power Pack sales, there's no reason why it's not doing hundreds of millions in revenue per quarter. As it relates to GameStop's legacy management, there's no plausible reason to me why this decline in GameStop historically and the beginnings from the beginnings of the company to the choices they made in the ramp up in 2008 to the choices they made in management leadership from 2008 down to 2019, 2020. Like there's no plausible reason to me that GameStop accidentally, coincidentally collapsed. However, if it's helpful for anyone, I did want to clarify that there is that technical, like, okay, we don't know, no, right? We don't know, but if there's a 98% chance, that's as good as knowing as it relates to financial modeling. Now, if I say that on my channel, like if I say that we know something, what you can interpret it as a listener is, oh, Jeremy thinks that this is 95, 98% plus odds, right? Because again, you could talk about something that's 100% odds. And if we're sitting in a college psychology class, it's like, well, actually, I think therefore I am. See, here, the other side of the coin is I am, therefore I can't think, you know, I'm being stupid. But again, if you're talking about point zero 0.01, point zero zero 0.001, it doesn't matter. It doesn't affect the model. It doesn't affect how you would value it. It doesn't affect how you would think about your money. But if I say anything that I say, we know, right? Like we know this. And your thought is that, man, I think Jeremy's placing 2% odds on something that I think might be 20% odds. Well, then that's like really worth the conversation, right? Like I share with Bada Boy, like if I'm saying something's a 5% or less chance, like or let's put it this way. If I'm saying something's 2%, 1% or less chance, and you think actually I think it's 5%. It's like, okay, well just crunch the numbers and see how that moves the needle for the weighted probability valuation. Which Tony, like De Niro, for example, said the same thing in this video. He's like, GameStop probably will convert the dilutables, or yeah, dilute the convertibles. Like they probably will. I'm just saying you can't know, right? I'm like, okay, then what are we even talking about, right? If you think, oh, GameStop, yeah, they probably are doing hundreds of millions in power packs based on Cohen's statement, based on corroborating evidence from power packs purchasers, as well as Courtyard.io sales plummeting um, simultaneously with the power packs beta being launched, simultaneously to the fundamental support for alternative stores of value, as well as gambling, right? Which I'll get into in a future video, but power packs is better than gambling, and gambling is a huge industry, okay? So all these fundamental reasons why, okay, yeah, they probably are. I'm just saying you can't know. If that's all you're saying, like you don't have to come at me. I'm trying to clarify my intentions with you guys that there's no difference to me versus from knowing to, well, it's only 99%. You know, if you're like, actually, it's 97.8%, I'm like, I don't care. That's the same thing to me. It's the same thing from a valuation perspective. It doesn't move the needle. If you think I'm actually like generally misguided, I really definitely want to have those combos. because the difference between 2% and 20% is a real big difference. But one thing I share with Bad Boy that I wanted to share in this video is like a 25% chance is just as plausible as a Major League Baseball player getting a hit in a baseball game. You know, that happens on average once every single game that they play, you know? So, like, that's a real, you can't just like, well, what if, right? Like, if you think something's a 25% chance of happening, you need to see that case made with strong evidence. Again, think about baseball just as likely. If you think, I think this player is going to get a hit today that's batting 250, right? You have a lot of support for that, right? That's not like a just a cute conversation, you know. We're talking about a massively plausible, very common scenario, not just a what if this or well, technically we aren't positive about that. So I wanted to help you guys understand me, but also discern for yourself as you're consuming GameStop content from me or from any other people as well. What's the conversation that's being had? And I apologize if I'm ever coming across as too brash, or if maybe you feel like my emotion behind the company skews my ability to look at things impartially, right? Like even hardware, a 10% chance, right, that hardware growth is stagnant, right? Obviously, we know it's going to grow short term with the Switch 2 cycle, but like big picture, when you think about valuing the hardware business, like what if margins are only 16% and they're growing at the same pace as inflation, right? 10% chances, like I give that a lot of legs. Like, what if some technological shift happens before the next or the next console? Like, what if consoles and hardware aren't indefinitely growing that well, right? What if it's just purely cyclical and the market cap and the margins and the money made is kind of fixed, right? Like that's a meaningful conversation. And then there's two ways to look at that, right? One is how does that affect the weighted average probability, right? Like how does that affect the way you value the business from a fair value perspective? And the other way to think about it is, well, what does that mean for the floor of the business from a worst case scenario perspective? And I want to talk about this in more videos coming soon, talking about just the overall portfolio management of GameStop. Because when you think about GameStop, there's a lot of different reasons why you might be invested. There's a lot of different scenarios that could cause different outcomes. And so understanding what's the worst case scenario and what's the weighted average fair scenario, what's the best case scenario, all conversations worth having. If this was confusing, let me know in the comments. But hopefully, some helpful clarity, hopefully, a way to help you guys think about your investment. I did want to say thank you to those who have joined the channel as fans and friends. Thank you to those who have joined as subscribers. There are only 111 spots left in the 2525, aka the inaugural year of the Human Covenant War, aka the Halo Sub Club. Sorry, guys, Y2K Sub Club is sealed. It's not open, but the Halo Sub Club is open. There's 111 spots left. Would love for you to be part of it. Trying to get there by earnings. Really just trying to get there by the end of the year. Really, I'm just trying to make videos covering this company because I love this company a lot. Hopefully, y'all are all on the same page about that. Okay, let me know what you think in the comments. Leave a like. Appreciate you for being here, and I'll see you in the next one.